let me go through a few ideas here that maybe can kind of guide us to where we are and where we are coming from. EUROCROWD, the European Crowdfunding Network, was founded basically as an idea 10 years ago, incorporated in 2013, with the aim to foster knowledge exchange, open discourse, standard setting, in order to create a professional industry. That was our idea. Not everybody must share this, of course. I have 3 parts. One is a short introduction on crowdfunding in case somebody didn't raise their arm earlier but should have, but it's really basic. Then I talk a little bit about market data, and then I will touch lightly on regulation. So first, here's another great philosopher that basically asks here, when did you realize that it's you who's too stupid to see that this is a good idea, and it's not the idea's fault? So this is basically the break on most innovation in our world, that somebody says, no, this is not a good move, because they don't want to change their own attitude or leave their comfort zone. This applies everywhere, yeah? And crowdfunding, in theory, has addressed this. I show you a slide which we've done 10 years ago, hasn't changed at all, which is basically the idea of how do you finance a project, an idea, become a business? How do you become Tesla? That's the thing. Or how do you clean the ocean? So you start with an idea and nothing else. And if you bring this idea to other people and they don't realize that this is a good idea, you will get nowhere. So you need to convince them. In traditional financial settings, there's an investment committee, 2 or 3 people. If you're in a bank, they will run the spreadsheet. They will say, we're sorry, but the market you are in is not profitable and our system doesn't think you are a good business. In a venture capital fund, you will have 2 or 3 guys, usually, that come from one sector that say, no, I've seen this all, this doesn't work, the business model needs to be like this. You will not get funded. If you go to a business angel, that is an individual that has made money somewhere and knows that he's eaten wisdom with a spoon, but only in a sector. And the sector often is not related to what you're doing. Often that is hard to get money there. So you might have the best idea or you might have the worst idea. The people you pitch your idea to are potentially even worse placed to judge it than you are. So what do people do who start? They ask their friends and their family. They don't question, they are just supportive. Of course, Joan, here's money, and you're our son, of course, go ahead. That is not a good validation process for an idea. In comes crowdfunding, saying, there's a lot of people with different backgrounds. They can potentially give you better guidance. May not always work, but that was the basic idea of crowdfunding. So why do people do crowdfunding? Why do people give money to a crowdfunding project? Who do we know? There's scientific studies on this that try to create analysis of the motivations. They ask people. It comes down to social return, material return, or financial return. Financial return is clear. I give you money and you give me money back, and ideally more money. That's what finance drives. Material return is I give you money and I want some benefit, but I don't need money, but I want to have something that I can use. And social return is I see the need for something to be done, but it will help everyone, but I don't want anything else back. It's this warm feeling that people have after doing something good. And why do people go and ask for money to the crowd? They want money. All of them want money. Yeah. But money mustn't be the first or the only reason you do it. So you want feedback. Is this a good idea? Do you think this works, how I put it? Should I put it differently? You want to see if people would buy it. Is there anybody who would buy this? And then you say, well, actually, more than I thought. So you get a validation of your idea. You get a validation of the technology. Or you get the feedback that it's wrong. And you go back. And we could go on about fantastic campaigns that have been done with targets that were illusionary, but that they used to renegotiate supply chain contracts, to put costs down in their production, through the feedback and the buy-in from the audience they got. What are the benefits? I already mentioned it. There's a validation of pricing, demand, product design. depends on your project, it depends on how you run it, and depends on the feedback you manage to get out. But there is a possibility to work this way. You can innovate your customer services. You suddenly have a direct feedback from your customers. Who doesn't remember the times when big corporations put out products that nobody wants, that fail? I mean, there were Apple products that failed. Nobody wanted to buy them. Microsoft is famous for this. Here you have a chance to early engage with your audience and to innovate your customers with the product you want to develop. You can reduce cost in the same way, by incrementally collecting feedback through crowdfunding. And it empowers the consumer, because the one that is actually the buyer of your product might also be an investor, or might be somebody who thinks that he helped to develop the product. So he may have a long-term relation to your business. So these are potential benefits. Of course, everywhere you have risks, reputation risk, especially if you are an established organization. This may go badly, and it may reflect on you as an organization. We had fraud cases, exist as well, even in Europe, platforms that were fraudulent. You can have distrust. Why do you need to raise money? We've seen this with municipalities that went to crowdfunding and didn't raise anything because the audience said, but you have all the funds you need. Why do you want us to give you money? So they didn't manage to communicate this correctly. Distrust. And of course, lack of return in case the things you really wanted to achieve don't come out. You don't get enough money, you don't have enough sales, and so on. These are risks. To the crowdfunding models, and we may hear a bit more about this. Donation, that is a donation contract, as you know it from any type of, say, NGO. You give money, if it's in your country, you may even get a tax certificate. Reward, it's a nice way of saying a commercial purchase. So you give money for a product or service that is going to be delivered in the future, and you have something material in return. Sometimes a gift, coffee cup, sometimes an actual product. And you have the right to return it within 14 days to the European Union. So, lending, it's a credit contract. I mean, if you go to the bank and raise money for your business, that's what crowdfunding does. Or it's a debt contract. There are, of course, different structures, and maybe this is what we hear later on. And then we have equity. It's direct investment into the ownership, could be in usually called transferable securities for the lawyers. It's shares, it's bonds, whatever you have. So you have an ownership in the business. So around these models, crowdfunding basically operates. These are not necessarily innovative. What is innovative is the way of how you gather the support from the people. Let's go to data. Let's give you a little idea of what this market really means. And so here we have two guys doing crowdfunding and defining themselves as crowdfunders and not beggars. And that is not without argument, because this is not in professional industry today. This is not even something you can grasp. It's different in every country. Every platform operates differently. So how can you say this is crowdfunding, and how can you not say this is crowdfunding? And this becomes even more obvious when we go through the slides. I will refer solely to the University of Cambridge, which provides the only data set that covers all of Europe. There's much, much better data sets for individual countries, but they do it for all of Europe. And it is really not that good. But it's not bad, it's the best we have. So we need to always be very critical about what we look at. Is it begging or is it crowdfunding? Just to give you an idea, it's a table, it looks horrible, but we have data for 2017, France. They made about 660 million euros in crowdfunding, in that market. We don't know if the data is correct, it could be more, it could be less. It's an indication. That is quite nice, yeah? That is more than business angels invest in France. So it's good. If you look at the venture capital industry and just look at the first rounds, well, that's not bad either, yeah? Not quite the same, but it's not bad. And then we see Germany, also quite big, nearly 600 million, and the Nordics, and the Benelux, so they brought this thing. And then you come to the point when you if you're a little bit kind of in the market, you say, But why Georgia? Why? And this is about alternative finance. Georgia doesn't have an alternative finance market. So the study works on self-reported data from people in the market. Yeah? In some markets, they have contacts that can communicate data, but in the end, they have definitions of segments which might not be applicable in every market. And in Georgia, there is no alternative finance. But in Georgia, you have microfinance, and in Georgia, you have remittances, and you can see this also as an alternative form of investment. It's not crowdfunding. Yeah? So here we have within this study, we have an issue with the definitions and the applicability. That brings us later to the third point, which is regulation. Just here split by segments. And you see they don't follow the segments I gave you earlier, right? They come up with their own because that makes sense to them. P2p Consumer Lending. Individuals lend money to individuals. Consumer loans. Yeah? You going to the bank, here through a platform, everyone in this room lends me money so that I can go on holidays. And then I pay it back incrementally. Invoice trading. In most cases, not even possible for individuals, but in some cases, yes. It's factoring. Yeah? A company has an invoice that it doesn't want to pay, it sells it, you buy it, and then you get the repayment later on. It's not crowdfunding. Yeah? It's involving the crowd in a financial transaction. Peer-to-peer business lending. It's not peer-to-peer. Yeah? Peer-to-peer means here individual citizens lend money to a business. A peer would be business lending to a business. Really exciting model as well. It could work, but this is not what they talk about. So individuals lend money to businesses. Real estate crowdfunding, it's just a different asset, but it's structured either as a loan or as a tradable security. So it's either business lending or direct investment. But they classify it as a separate entity because there's a lot of this happening. And so there's slightly different models how they do the transactions. Equity-based crowdfunding, here they mean direct investments into SMEs, startups, small businesses, through a share in the business or an ownership structure or something similar representing this. And then we have reward-based crowdfunding. That is when you give money and you get something in return that usually has a lower value than what you actually give. And we can go on with the next slide. Don't have to, it's just, again, the different type of business models that they show there with the split between institutional funding and private funding. That brings us to what we heard with match funding, what we heard earlier, what we will hear later on as well. So is there institutional money involved? Yes, that is red. And blue is non-institutional. So whatever this means in volume, we don't know. It doesn't say it. It's in percentages. But we see here peer-to-peer consumer lending. There's a little bit of institutional money involved. And if you look at invoice trading, there's quite a lot of institutional money involved. The definition of institution is fairly broadly captured here. This could be a local government, could be EU funds that are applied. In invoice trading, it's probably a hedge fund. In peer-to-peer consumer lending, it's probably a hedge fund. It's probably a mix of everything. Yeah? But we don't see the split. We don't know how much is being done. So the data set isn't clear to us, and we can't quite question it. Here we have it again, yeah? Same market, and you see balance sheet lending and so on. So we have seen enough data. You see what I mean? There is quite a lot of activity. We see a lot of money flowing into this market. We see different sectors being addressed, and we see that different types of investors are active in this market, private, institutional. Here again is the institutional funding by country. You see France and Germany, it's very limited, very small red, but in the Nordics it's more. It's unclear if this is, where this is being invested in. The data isn't there. So now we know from the data, and I have 5 minutes and I have to hand over on the regulatory side. We see on the data, we know it's happening. We don't know exactly what is what. We don't know exactly where it goes, but we know there's a demand with citizens and there's a demand with institutions. It might be private institutions, it might be public institutions. In reality, it's a mix of everything. So how does this fit? Why is the data so uncommunicative? It has a bit to do with regulation. This is a slide I used 10 years ago as well. And today we could simplify it by removing one of the boxes. That's roughly what has changed. So why is it complicated? Because crowdfunding didn't exist. It came up and it needed to be fit into existing rules, which were not made for it. And every time you don't fit into one box, you move it out, the regulator will come and say, oh, but if you go there, then you fit into this box. And so suddenly you have 500 boxes that you need to deal with. And a lawyer that says, oh, more billable hours, come to me. So let's see. Why do we talk about regulation? Because in 2008, our banks failed. We had a market failure in the banking system. We realized this when US real estate investments went sour. One big investment bank in the US failed, and thousands of other banks closed down. They had a huge impact on the market. There was no money available for small business. Some of the biggest banks in the world were supported or taken over by governments. And what do you do if you are pressured for cash and you're an institution that lends money? You focus on the contracts that make most money, big clients. So we had a lack of SME finance. Already shortly before, the first crowdfunding platforms had appeared in the UK, in the US, lending platforms. This 2008, this was the birth of the idea, wait a minute, if the financial system fails, we can help ourselves. This motivated a discussion also in Brussels. As of 2012, the European Commission has looked at crowdfunding. Parliament has looked at crowdfunding. They created a fintech action plan and included crowdfunding. In fact, crowdfunding, because it was social, it had an emotion attached to it, was becoming the main driver of it, because the rest of fintech is cold and calculated. And this was sellable. So we moved through this, and the Commission, after basically waiting a little bit because they didn't see too much action within the markets, because regulators started to regulate on national level, saying, oh, you have to do it according to our laws. They waited before they could put forward a proposal to say, now we see in the data 600 million in Germany and France. There is a market. We need to enable cross-border fertilization so that investors from France can invest in Cyprus. Yeah? That investors in the north of Finland can invest in solar energy here in the Mediterranean because it doesn't make sense up there. And vice versa, you can invest into water energy that is being generated there. So this was the thing. So we have this regulation that was proposed by the Commission. It went through the policy process, and we now have a law, which is a law since November 2020, but because everyone needs a bit of time to get used to a law, it only became applicable in November 21, which means nobody uses it. Member states are still grappling. We will hear how far Cyprus is. I'm really excited about this in a minute. And we know that the Commission thinks about extending this a little bit longer. So we have a legal text that is law. We have technical details that are still being finalized. That's the level 2 text. We are already discussing a potential extension for this transition periods for all those actors that are already regulated under national law so that they can continue operating for one more year. Every new platform would have to apply according to this. But this applies to business finance only. Business, not individuals, and finance. Lending, debt, equity, not reward, not donations, not lending to individuals, no consumer loans. Very clear. And because also in Europe everything needs to fit in what we already have, Commission looked at where is capital market law, where are other laws, and how can we squeeze something in between. So it's very close to capital market law, but different enough so that it doesn't become an investment fund or some other structure. But it still allows to use an investment vehicle. So you can create a little entity that collects all the money to finance the business. for example, for non-liquid businesses, a solar plant, a building where you can't sell transferable ownership, like this is your stone and this is your stone. You use these kind of structures. And it allows for auto-investing along algorithms. This is again, when you look at the lending side, people don't say, I want to lend money to Dargo because he's a nice guy. They say, I have 1,000 euros. I want to lend it to 50 companies and I want to make 8% return. So this is being automated. The new law allows for this. Other regulations to watch. Consumer Credit Directive is currently being written. Consumer Credit Directive will regulate consumer loans. Crowdfunding in consumer loans will be falling under this. Potentially comes into force in 2 years or so. Markets in crypto assets. Crypto assets, ICOs was a big topic. A new regulation has been written, and this will all fall under this, but potentially everything that is a tradable security under capital market law may fall under this crowdfunding rule. We are not quite sure yet, but it looks like that this will be the case. And then there's other regulations that also will apply to, for example, reward-based crowdfunding platforms and donation-based crowdfunding platforms, which already exist. Payment service provision, handling of money from clients. You can't just do this, you need a license for this, and these rules exist, and there are service providers who do this. Tax, consumer protection, all these rules apply to all other type of crowdfunding. And so donation and reward-based crowdfunding has been largely regulated because there are commercial laws that already do this, but there's no specific rule for them. And so sometimes there might be some issues. For the other ones, this is going to... And so I've finished spot on time and wanted to give you this introduction into what crowdfunding is and what it isn't, and what it was and what it might be. I believe that with this regulation, which will harmonize how we look at crowdfunding across Europe for financial transactions, we will see a shrinking of the market. Of the 600 platforms that were always said to be there, and then you had to look for them, and some of them were tiny, there will be not many that survive. We know that in some markets that is the purpose of the regulation. Less players, but more professional players. Less small players, bigger players, scalability. And so the data issue that we had, where we don't really know how to define this, will change, because as of this year or next year, everybody will operate under the same rules. And a platform that now creates under Cyprus rules, which we learn in a minute how this works, can finance business in Finland and in the UK, even though it's not part of the European Union, and in Germany, and can collect investors from all over Europe. And that will hopefully really push this forward.